Business Daily on Trust TV. The Monetary Policy Committee of the Central Bank of Nigeria, which is the decision-making body of the CBN, will commence has commenced its first meeting headed by Chiamaka Enendu, the current Central Bank of Nigeria governor. And that meeting is coming after we had seen about two postponements of two different meetings in the second half of last year. This meeting, I should say, is a very important one, especially in a time such as now. And joining me to discuss what we should expect from that meeting is an economic analyst, Dr. Emmanuel Idenyi. Thank you, Doctor, for joining us on Business Daily.
Good morning, viewers. It's a pleasure to be with you. Happy New Year.
Happy New Year to you too, Doctor.
Thank you.
So finally, a meeting from the MPC. Like I stated in my introduction, we had seen about two cancellations in the second half of last year. What are you looking forward to from this meeting?
Thank you very much. First of all, it's important to state that the Monetary Policy Committee meeting headed by the Governor of the Central Bank is an important meeting that decisions are made for the Central Bank to use the monetary policy tool to regulate the economy. Now, because of the ousted Central Bank governor, there was no MPC meeting in September, there was no MPC meeting in November, which are statutory. Now, even though the law says once they achieve two-thirds of that meeting, but we can clearly see that because that meeting was not held in September and October, there was a bit of chaos in the economy because no policy direction per se. And the Central Bank governor and his team just came on board about that time, so they couldn't have just jumped into holding any meeting.
So it's understandable.
It's understandable. And the president has to send names of the MPC committee members to be screened by the National Assembly before that meeting can hold. And if you know, the MPC is constituted of the Central Bank governor and the deputy governors and other persons. And before that, Central Bank deputy governors and the governors were told to go. So there is no way they would have just constituted an MPC meeting. There is no structure, as it were. So until the structure was put in place by the confirmation of the members last week, it suffices to say that this is a deciding meeting because a lot of decisions will be taken based on all the statistics we have seen, considering the inflation, considering the galloping exchange rate between the naira and the dollar, and considering every other statistics. We will want to see a definite statement by the chairman of the MPC, which is the Central Bank governor, Dr. Chiamaka Enendu. So everybody is waiting. Industry watchers are waiting. And for me, it's not just to reel out statistics. What is the impact of the decision on the ordinary Nigerian on the street? How will it affect the price of commodity? How will it affect the price of consumables? How will it affect economic decisions that the financial institutions will have to take? So it's a deciding meeting, and I don't expect them to just gloss over taking tea and lunch, because it's a meeting that very definite decisions should be taken, because we are in a period where we are waiting for the Central Bank to take an action or a decision that will lead the economy to a trajectory or where we will begin to see recovery.
Indeed. Okay, you have made a very valid point, Doctor, as to how important this meeting is. I mean, like you rightly stated, economic watchers, economic enthusiasts are on the lookout for what will come out of this meeting. But let's talk about policy direction now, particularly the MPR, that is the monetary policy rate. During the last meeting, which held in I believe it was July of last year, there was a tweak in the MPR from about 18.75% or 18.5% to 18.75%. And there are predictions that we should expect some sort of change in this current meeting. But let's hear from you. Are you also of that school of thought that we should expect, a tweak with the MPR, that the monetary policy rate?
Definitely, because as much as many Nigerians do not understand the impact of those tweaks, they feel the effect, if it's negative or if it's positive. So this meeting being held today and tomorrow by the Monetary Policy Committee of the Central Bank will need to deliberately take some decisions. The CRR, the asymmetric corridor, the MPR rate, these are rates that also guide the borrowing rate and exchange rate of the commercial banks, the PFAs, even those in the money market, because nobody can just arbitrarily decide to fix any rate. Permit me to tell you, the banking sector is the most regulated industry anywhere in the world. is most regulated, even though a lot of transactions are routed through the banks, whether legitimately or illegitimately, until we make definite decisions that in the next 2 months before another MPC meeting, we want to see the impact in the lives of Nigeria. We want to see that there's a deliberate decision taken as concerning the exchange rate, the BDC operators, the FX transactions. What are the limits of commercial banks? Why would people store foreign currency in the name of saving money in another man's currency in our own country? These are the decisions that the Central Bank Monetary Policy Committee meeting has to take, because Nigerians are waiting. So it is the implementation now that will make those ordinary Nigerians will begin to feel the impact of this meeting. Otherwise, they may not understand the import of this meeting, but when they begin to feel the impact, then they will understand that probably something has been done. They may attribute it to whatever, but we will know and can be able to trace it to this meeting that is taking place today and tomorrow. Okay,
Doctor, you have said that you are definite, rather, that there will be tweaks with the MPR, yes, the CRR, the asymmetric corridor, and all of those. But what will be the considerations when reviewing these rates? We understand that inflation is a big, the big elephant in the room. But what are the other issues that will be considered when reviewing this rate?
Number one, inflation is the big elephant in the room. You need to take it out of the room. Yes. Number two is the arbitrary exchange rate that kept on going up to the point that Nigerians will take their hard-earned naira, go and meet a BDC operator, buy foreign currency, and come to store with the hope that they want to sell it when it goes up, and the central bank cannot control the rates. Yours sincerely, I know of someone that bought dollar at 700 and he sold it last week at that rate. And not because he did anything, because there is no mechanism to control the rise or fall of this currency. And don't forget, this has enabled people who hitherto didn't think of making any means of livelihood to go into it. And that is not the way of business. And that's where monetary policies are tools of the central bank. Fiscal policy are tools of the Ministry of Finance, of government. So this is one tool that the central bank management and the MPC will need to use deliberately. Take inflation out, the exchange rates, the custom and excise duties, the stress of clearing goods, taxation. Of course, the president has a committee that is set up. A lot of businesses are not in the tax nets, and government makes a lot of money from taxes. Instead of increasing taxes, why not get more people deliberately to get into the tax net using the 4 canons of taxation? These are the things that is deliberate, and permit me to say, these things will not just happen automatically, because we know what has happened in the last 8 years, only for the president commander-in-chief sitting now to discover that they were not as what he saw, and he needs to roll up his sleeve and make some definite statement, because there is a body language that changes the atmosphere when the president commander-in-chief of a nation, whether he's an economist or not, makes a definite statement, definitely by an advice from the central bank governor, by an advice from the minister of finance, that will help the nation to douse the tension while they are still working behind the scene. Because I can tell you for free, being a banking professional before, there's a lot of work going on behind to ensure that the ordinary man on the street can be able to feel the import of the work that is being done. We may not be able to explain to them, but they should be able to feel it, that the price of this commodity, that commodity, government has taken this measure, will begin to come down. That is when Nigerians will understand that there's an MPC meeting that took place 2 days or 3 days in Nigeria.
Indeed, Doctor. Let's talk to issues around, there's been lots going on with regards to trying to mop up liquidity from the forex market. And over the weekend, I believe that was on Friday, we did see another statement from the CBN regarding that, talking about, sanitizing the black markets particularly. And I do understand that the CBN has categorized BDC operators in two, the tier 1 and the tier 2, talking about, the limitations they should have and the capital requirement. Let's start with capital requirement for tier 1. I believe capital requirement is at 2 billion naira, and is it 500 million naira for tier 2? What is this supposed to achieve in layman language, especially for the ordinary Nigerian who's watching and wondering, is it just another policy coming from the CBN, or what is this expected to achieve? Let's hear from you, Doctor.
The question would be, who are the persons that own these BDCs? Are they the usual politicians? Because not everybody can achieve that capital requirement of 2 billion or 500 million. It's just like you are setting up a microfinance bank or a commercial bank. You must achieve that minimum requirement. it's not everybody that will meet it. What profiling can we do to people that are able to meet that capital requirement? What are their involvement? Because there's a lot of political involvement in giving licenses to BDC operators.
But doctor, the fact that the CBN has given such a high limit, I mean, we did hear from the president of the Association of BDCs where he lamented such high amount. What then is the CBN trying to gain from this? What
CBN is trying to do is to technically merge BDCs. If you cannot meet the capital requirement, you obviously cannot get the license to operate. If you cannot meet either 500 million or 2 billion, you cannot operate. You may want to consider merging that your business with somebody else so that you can get that capital requirement. Just like what happened in 2004-05 when there were 89 banks. And the central bank governor then came and gave a capital requirement that crashed 89 banks to 25. Banks, 3, 4, 5 banks were merging.
So this is to reduce the number of BDC operators.
Because CBN, as it's presently constituted, knew that they were part of the racketeering of the BDC operation with the commercial banks. CBN, the commercial banks. Because no BDC operator has the power without the assistance of a commercial bank or through the CBN. Dollar is not the sand we pick on the ground. It must come through a legitimate means. And to legitimize it, is either through the commercial banks or the CBN. So CBN making things difficult for people. In terms of access, CBN should take ownership of access to Forex. Ownership of access to Forex. That way they can be able to control it, because statistics released the statistics last week that only 10% of Nigerians really have need for foreign currency. I worked in the banking industry for 13 years. I didn't have a domiciliary account because I did not need it until today. Except you are doing a transaction abroad and they need to pay you in dollar, or you are selling something you want to pay in dollar. Why do people want to open foreign currency accounts? Some they are opening it for social proof that we own a dollar in a country that is still underdeveloped or developing. Now, what we would expect after the MPC is that central bank will begin to implement the decisions of the MPC. Implement, because usually there will be a communique that is read and the assumptions will be made public. What this has technically done is automatically increase the 2024 budget, which was predicated on some assumptions, but that's not the assumption today, particularly the dollar. Look at what's happening to Dangote refinery. He cannot get required crude to refine. It cannot be given. It took 1 month to give him a certain percentage. And that is a refinery that was built with taxpayers' money in Nigeria. And these are the areas, and CBN has seen, thank God for the independent investigator of the central bank. He revealed a lot of things which is being understudied now, giving credence to the fact that the former management of central bank did not do some things very correctly that has put us where we are. And these are the things that the central bank governor, Yemi Cardoso, and his team have to grapple with as we speak.
Doctor, talking about the things that Yemi Cardoso has to grapple with, you made a very valid point in the area of, domiciliary accounts, something that has become like a social status to have. What actions would you expect to be taken in that area, the area of, dollarization of the Nigerian economy? What sort of, immediate measures should be taken?
First of all, I don't know if you are aware, sometimes 2 weeks ago, a nation in Africa issued a statement that they should stop using dollars as a means of exchange in their country, Egypt. Precisely.
Are you in support of that?
Absolutely. And I believe we are even behind in taking such decisions.
But doctor, isn't that going to, reduce the number of, foreign direct investment and investor sentiment?
What we should do is to increase our balance of payment rate to be able to transfer to other nations, because some of these people, they may want to do a transfer to their country. There is what we call SWIFT, Society for One International Funds Transfer, and the corresponding banks. What is our balanced position as a nation with those banks? So that if Mr. A wants to transfer money, he should give the instruction in his Naira accounts, and the equivalent will be transferred. That is what used to be when we were banking. So, but because we ate up our position with those countries, our integrity was reduced. We couldn't now no longer, because people do not understand that you want to transfer $100 from your account in Bank A. You think it's the $100 in your account that left. No, there's a position that the bank must have with central bank. There's a position that that platform, SWIFT, must have with corresponding bank for them to make that payment to that country. And that is what it used to be. It's not, we're not saying anything new. It has always been. So the central bank must do that to bring back the confidence that people have. And that's why people go ahead to collect money in Naira and change it to dollar, meet BDC operators, and they will begin to spend. It's painful that the number of people that do not require dollar are the ones suffering from the rise of dollar. You and I don't need it. I practically don't need dollar. I do not need it because all my transactions can be crystallized in naira. But if you do genuinely have need for it, you want to pay for publication of an article, lecturers in the university, they should be able to use their naira card and pay. But most platforms do not even accept our naira card because of integrity issues of what fellow Nigerians like you and I have done to batter the image. And that is part of what the central bank governor should work on correcting, because this will bring back investors' confidence. And when these investors bring in their money, they shouldn't have a problem if they want to repatriate a part of it when the needs arise. They want to repatriate a part of their profit because they also want to grow business. They want to also have an effect of business they're doing in Nigeria, in their country, which they should be able to repatriate it without stress, without noise. And that is the uphill task that the central bank governor and his team has ahead.
Doctor, our time is fast spent, but in 1 minute before we go, part of the recent measures meted out to BDCs is, engaging in street trading. That has brought up a lot of conversations around, BDC operation. Usually it's not uncommon, or it's common rather, to see them, trade on the streets. But let's hear from you. Are you for or against that?
I am absolutely against the street trading of foreign currency. The first instance, we shouldn't have even degenerated to that point. So CBN, with the Economic and Financial Crimes Commission that embarked on that, is to raid them. Now, the CBN has raised the bar. That is to say that if you do not have that capital requirement, you cannot hold foreign currency. And if you are found, it's a criminal offense, you should be prosecuted. These are measures that in the next 6 months, we should begin to see the impact. It will technically affect the cost of goods, cost of transaction, value of services, and you see that the naira will begin to gain. Then services that we offer in Nigeria, schools, should not take payments in dollar, for crying out loud.
Indeed.
We should not take payments in dollar. Insist, and if you insist, we shut down your school. Then find a way to sort yourself out.
Dr. Emmanuel Idenyi is speaking very, intensely around issues within the Nigerian economy, from the recent measures meted out to BDCs from the CBN, and obviously the Monetary Policy Committee meeting that has started today and will run between today and tomorrow. Thank you, Doctor, for your insight on the program this morning.
It's a pleasure to always be here. Thank you very much.
And this is where we draw the curtains on today's edition of the program. Join the conversation on social media and let us hear your thoughts on the topic of today. My name is Chiamaka Enendu. Thank you for watching, and bye for now.